Hello, everyone, and welcome to another episode of Selling Greenville, your favorite real estate podcast here in Greenville, South Carolina. I'm your host, as always, Stan McCune, realtor right here in the Greenville market. You can find all of my contact information in the show notes if you need to reach out to me for any of your real estate needs here in Greenville or elsewhere. I can connect you with realtors all over the country. And just a reminder, as always, please like, rate, review, subscribe. All of those good things with regard to the show. Make sure we get the show out to as many people as possible. Make sure you don't miss future episodes. I would hate that. Yeah, that's all I ask of you guys is to please do those things. If you can leave a kind review and a 5-star rating, that would mean a lot to me. So thank you to those that have done that. The more we can get to, the merrier. Today, I want to talk about not just numbers and data and all these different things that we tend to talk about. And I also don't want to just talk about vibes either. That's why I talk about data a lot, is so that we center conversations about real estate on what's actually happening, not what feels like is happening. But sometimes this can just all be a little bit abstract. And I want to make it very practical. Sometimes these conversations, I will kind of allude to different practical elements of buying and selling real estate in this market. But today specifically, I want to discuss strategies for how to approach this shifting market, right? Because it's much different if you're buying or selling real estate right now. It's much different than it was a year ago, 2 years ago, even 6 months ago. And so it's one thing to talk about the data. It's another thing to talk about, well, how does the data and how does what's happening influence our strategy? And so that's what I want to discuss today. We're going to go through 5 points, 5 strategic points for buyers and 5 strategic points for sellers. And we're going to kick things off with buyers. Here's first and foremost, and some of this, if you guys are longtime listeners of the show or longtime watchers of the show on YouTube, some of this is going to be repeat of some other things that I've said, but it still bears repeating. Number one for buyers, my advice to you for strategically considering what to do in this shifting market is, first off, ignore doomerism and most headlines. Okay, the headlines about housing are almost always wrong. I can't express to you enough how much the media will twist what's really happening in order to serve a narrative. They'll focus on a market like San Francisco, which is very different than almost any other market in the U.S., or a market like Boise, very different than almost any other market in the U.S., but then they'll make it sound like, well, this is happening everywhere. Well, not necessarily. And doomerism, in case you're not familiar with that term, it's not exactly a term that I coined, but I use it quite a bit. Doomerism is people that we call doomers in real estate. They just want the market to crash. They're obsessed with it. They've been predicting since 2012 that the housing market is going to crash. They've been wrong every single year since 2012. And these people have massive, massive social media followings because there's all these people that are just angry and that they feel like they've been left behind, and they don't care if the entire economy crashes. In fact, they want the entire economy to crash because they want everyone else to feel the despair that they feel. And so doomers, let me tell you, I see this all over social media right now. There's like an account on Twitter called like Darth Powell. There's another one, Unusual Whales. And these accounts aren't just straight doomer accounts. They do provide sometimes some useful information on what's happening in the economy and whatnot. But oftentimes, once they start weighing into the housing market, they start pulling out their charts and making all sorts of false comparisons. Okay, so for instance, they will compare month-on-month percentages for things that are rising from record lows. So for instance, they will look at delinquencies, people that are starting to run into issues with racking up too much credit, and they will compare month on month what's happening, and it'll be like, whoa, delinquencies raised 200% from May into June, and you hear that and you're like, oh my gosh, the entire economy is about to crash if delinquencies are up 200% in 1 month. Well, okay, guess what? If you go from one delinquency to three delinquencies have gone up 200%. But three delinquencies is not very many delinquencies. But these are the sorts of games that they'll play. And they'll show charts that are misleading, that make it seem like things are spiraling out of control, when in fact these charts are extremely deceptive. They're trying to use a narrative. Here's another one they'll frequently do. They will do year-on-year comparisons, but they will only show the year-on-year comparisons going through a certain year, and it's very strategic, the years and months that they will use. And oftentimes what they'll do is they'll do it through 2021. Well, what was 2021? 2021 was the craziest of crazy housing markets that we've ever had. And then they will compare the market today to the market in 2021 and then say, we are in a 2008 scenario. The market is crashing like it did in 2008. What they failed to do is to take the chart all the way back to 2008. If they did that, or took it back to 2006 or 2007, you would see that what they are saying is completely misleading. So they will manipulate the charts and the data with only certain dates and only certain time frames that fit a narrative and that don't actually tell you what's really happening. If you're watching on YouTube, I'm going to simply share with you guys a few charts from a blog called Calculated Risk. And I really like Calculated Risk because they don't have a dog in the fight, right? This is a guy, Bill McBride, who runs this website. He accurately predicted the 2008 crash years in advance. And he's been very good for a very long time in terms of his analysis, and he's not a realtor, a mortgage lender, or anything like that. He simply analyzes the housing market, and his data tends to be very accurate. So these are the sorts of people that I try to get my data from, rather than narrative pushers. So here is what the Calculated Risk blog, they have pulled serious delinquency rates from multiple data sources. And if you're watching on YouTube, you can see the chart. Basically, we're at record lows, right? Less than 1% total number of single-family homes are in serious delinquency, which is 90 plus days or in foreclosure at that point. So 90 plus days in delinquency or in total foreclosure. How does that compare? That's as low as you can see basically anywhere on this chart. I mean, there were some stretches where the Fannie Mae index had it a little bit lower in the early 2000s. But otherwise, in more recent time period, basically since 2008, we are at basically the lowest levels that we've ever been at. Let me share another one. I'll close this one out. How about multifamily serious delinquencies? So that was single family. What about multifamily? Well, multifamily actually is kind of high, right? And this is something to keep in mind, is that multifamily, and it's still a very small percent of the total number of multifamily loans. It's not even quite 0.4%. But in terms of recent history, going back all the way to 2012, it's actually quite high. And so that's something to keep in mind. If you want to be concerned about something in housing, the multifamily market is the one to be looking at closely, not the single family market. So there is something to be said for that. But guess what? These doomers are never talking about the multifamily market. They're only ever talking about the single family when they have these discussions. So let's go back to here's another chart from Calculated Risk. Let's just go back to prices as a whole, because this is what you keep hearing. Prices are really low in comparison to what they could be, and in comparison to what they were a few years ago. We're going through a crash again, and again, you can look at different charts, but there's a lot of data that just says that's not true. Looking at the Case-Shiller National and Composite indices, you see that from Composite 10, Composite 20, and the National Index, they're all at all-time highs. And the trend, which is the most important thing, is going up, right? They did have a dip. There was a dip that happened in 2023, It happened, really going back to 2022. This is when the market started to shift as a result of mortgage rates going up. But then in January of 2023, it hit the bottom, and then it started to go back up. And reminder that bottom that it hit in January 2023 was still insanely high. And so these are the sorts of things that I'm looking at when I can say that, hey, home prices are at record highs, and the trend is that they are continuing to go in that direction. And so ignore doomers. Don't listen to these headlines that tell you that the sky is falling and everything's crashing. Listen to the Selling Greenville podcast, because I will tell you guys will be the first ones to find out if the market is crashing, because I simply want to provide the best data. And I would love for the market to continue to be good, but I've said multiple times, I don't think that this is a good market. And am I opposed to a crash? Crash would be fine for me, right? I represent a lot of real estate investors. If I had, if the Greenville market had a big crash, my real estate investors would be doing great. I also invest in real estate myself. That would be great for me. So I don't have a dog in this fight. I simply try to track what's going on in the market to try to be educated for myself and for my clients. All right, I spent a lot of time on that. We're not going to spend this much time on all 10 points here. So let's go on to point number 2 with regard to buyer strategies. So once you've ignored all the doomers, the next thing you need to do is don't count on any major mortgage rate decreases until maybe 2025. And I'm going to add this into the equation as well. Don't count on a certain person winning the presidential election to swing mortgage rates, okay? I keep hearing these two things from people. They think mortgage rates are going to see some big decreases very soon, and I keep hearing people saying that, specifically Donald Trump, that he's going to come in, he's going to clean things up, and mortgage rates are going to go down, everything's going to be hunky-dory again. I don't believe either of those things, all right? So let's start with the mortgage rate decreases. Predictions right now are that the Fed is going to make one rate adjustment, one decrease off the federal funds rate this year. That's what most are projecting. It could be more, it could be less. We don't know yet. It could be in September, it could be November. Again, there's a lot. It could be today. We don't know what we don't know just yet. I'm recording this on July 30th, and so we'll have to wait and see. But every indication that the Fed has made is that they are going to be very, very cautious. They're going to make calculated decisions, and what they're going to do is they're going to probably reduce the rate a little bit, and then wait and see what happens, and then reduce the rate a little bit more, and wait for a few months to see what happens, and so forth and so on. I don't see them, taking the federal funds rate down 100 basis points overnight. Like, I don't see that happening. I think it's going to be 0.25 at a time. So rates right now, on Mortgage News Daily are in like the 6.8 range. Maybe if buyers are lucky, we get 2 rate decreases over the rest of the year, and we can get that number down to like 6.3. But again, it probably won't even go down to 6.3 because I think some of these rate decreases have already been priced into that 6.8 mortgage rate. So maybe we get to 6.5. That's not a major rate reduction. That's not going to move the needle for most people. Now, next year, all bets are off. We don't know what's going to happen next year. Could we see mortgage rates go down into the 5s? I think it's possible. I'm not banking on it, but it'll all depend on what the Fed sees, right? If unemployment, job openings, and other inflation data is favorable for the Fed to make rate reductions, then they will at that point. But at this point, I don't think you can count on anything for a year or so. That's if I were a buyer, I would assume that probably not until the latter half of next year will we see substantial rate decreases when it comes to the federal funds rate and when it comes to mortgage rates. With regard to the presidential election, again, the Federal Reserve is nonpartisan, right? Now, Trump, he can appoint people to the Fed, but and I've said before that there is a very good chance within the next 10 years that there's a president that tries to make the Fed partisan. So that's very possible. But I don't think that this is going to happen within the next 6 to 12 months. I think that would be something that would take years and years for a president to pull off. And regardless, the Fed's not going to listen to what Trump says. They just aren't. They aren't listening to what members of Congress are telling them. President Biden hasn't really said a whole lot to or about the Fed, so they don't have to listen to him. Harris hasn't really said a whole lot. So I just don't think that who wins the presidency is really going to impact rates really at all. Now, they could impact it in the wrong way, right? If Trump starts passing out checks to people like he did during the pandemic and starts doing, stimulus, that's the word I'm looking for. If we start seeing stimulus payments come in and then inflation takes off, we could actually see rates go in the opposite direction. We could see the Federal Reserve start to almost fight with the White House over inflation. That would be the worst case scenario. So it could actually go in the opposite direction if the right or wrong things happen. So don't count on major rate decreases until maybe the latter half of 2025. Number 3, price reductions. Okay, they're happening everywhere. And if you're a buyer, you are super excited about that. But there's a warning. Do not get greedy and lowball a good opportunity when a seller has just lowered their price. I have a listing right now. It's been a very challenging listing for me to sell for a variety of reasons. And we finally had 3 contracts fall through. We finally had to reduce the list price pretty dramatically. And so that's what we did. We reduced it. We did a big price reduction in order to just get this home sold. Sellers were ready to move on. And so that's what we did. And we immediately started getting offers. And one of the offers was an offer from not an investor. It's just a normal person looking for a house for themselves. $20,000 below our reduced list price. Well, that's too aggressive. I'm sorry. When already a major price reduction has happened, and it's just happened, you don't come in with an offer that's $20,000 below that aggressive price reduction. It is not a good strategy because odds are there are going to be better offers on the table. So guess what? My clients accepted a different offer, and after they had already accepted it, and by that point I had already rejected and sent an official rejection form to the other offer, then the offer that was $20,000 low, they came back and they said, okay, we're going to make a full price offer now. Well, it was too late. My clients had already accepted a full price offer. And by the way, even if they had come up to that price, there were other terms in there. They had made the entire offer buyer friendly. And again, it was too much of like, oh, they made this big price reduction. Well, I guess we can just lowball them and make all these terms buyer friendly. It does not work that way. Once the seller has made their price reduction, they want to see how it plays out, and they're hoping to get 100% of that price reduction, particularly for a home that's been under contract multiple times at a higher price. You can assume that those contracts were for a higher price than now the reduced list amount. And so do not get greedy. If you see a big price reduction on a home that you're interested in, operate under the assumption that there's going to be multiple offers after that price reduction happened, and you need to be more aggressive, not less aggressive, more aggressive to try to move forward and get that house. And by aggressive, I mean aggressively try to make your offer appealing to the seller rather than being aggressive as a buyer trying to just get the price lower and lower and lower. Point number 4 for buyers, figure out what makes the seller tick, okay? In this market, there is a lot of stuff going on right now with, people selling real estate. Like I said, there's a lot of price reductions, a lot of contracts falling through. Uh-oh, what just happened? I just had a weird AI meeting notes thing pop up on Zoom. So if you see that on the YouTube video, I don't know if that's going to appear or not. I apologize for that. But figure out what makes the seller tick. Like I said, sellers have a lot going on right now. And some of them are, they're still adjusting to the shifting market as well. We're about to get to the sellers here in a second. But for some of them, what makes them tick is they just want the highest. They just want the highest price. Some of them, they just want to sell as is. They don't want to mess around with repairs. Some of them, they're just looking for the right buyer, someone that they feel like is well approved and all of that. And they're willing to kind of fudge on some other things. And as a buyer, and me as a buyer's agent, one of the things I try to do is to try to figure out what is that thing that sellers are looking for right now. And it's case by case, right? So if you're a buyer, you're wanting to buy a house, and you want me to write an offer, I'm going to try to figure that out. And there's ways actually you can figure that out from the listing itself, right? The way a listing is presented by a listing agent, usually there are little clues in there. And then usually I have a conversation with the listing agent as well to kind of, discuss, hey, what do we need to do in order to get this thing under contract? That is a great strategy when the market is shifting like this. Number 5, and lastly for buyers, focus on monthly costs more than total purchase price. I cannot tell you how important this is. People don't understand that your monthly payment is so much more important. I mean, I can't tell you how many people I have this conversation with. Your monthly payment is so much more important than that top line purchase price number. And this is where a lot of buyers are getting hosed right now, is because, they're like, I want to move in this neighborhood and the prices are, at this price. And I just want to, I just want to move there. And they don't think about, oh, wow, this is going to be $3,000 a month that I'm going to have to pay moving in here. Or conversely, they might get really fixated on that house is overpriced by $10,000 in my head. We need to get them down $10,000. Okay. How does that impact your monthly payment? Think about it through that lens, because you're going to have an appraisal. You're going to have all these things done. You need to focus more on what the monthly figure is than the total purchase price. Because this is where I keep seeing buyers getting hosed because they are so fixated on the top line number, what the actual contract or sales price is, that they're not thinking about the practical, which is, what am I actually going to be paying each month? And oftentimes the conversation really shifts once buyers start to think about it through that lens. And when you've got a market like this where mortgage rates are fluctuating, prices are at an all-time high, affordability is at an all-time low, really you need to be thinking about this from a monthly payment standpoint and not so fixated on what that top line number is. Those are my 5 tips for buyers. I'm about to get into strategies for sellers, but first we need to talk about Piper Insurance Group, the official sponsor of Selling Greenville. They provide, for me and for many of my clients, home, auto, and umbrella insurance. They're an independent insurance agency, so they can quote out to different insurance companies, not just one, and bring you the best rate that they can find. They're licensed in South Carolina, but also North Carolina and Georgia, for those of you that are buying in some of these other states as well. And they can help you not just with primary residences, but investment properties as well, flips, rentals, ground up new construction, even commercial properties if you do anything in commercial real estate as well. So Piper Insurance Group, their contact information is in the show notes. Please, guys, I highly recommend. I'm not just saying this because they're a sponsor. They were a company that I used before they became a sponsor. That's how they became a sponsor. Great company. And I highly recommend that you reach out to them for a free quote today. All right, let's talk about strategies for sellers. First and foremost, this is one of my favorite things to do. Here's what happens. Let me give some context for a second. Sometimes sellers will list a house for sale and an offer will immediately come in. And if the buyer's agent knew what he or she was doing, they made a very good offer to the seller. Right? Because the home just came on the market. If the buyer really wants it, for a home that's just come on the market, you need to make a compelling offer. Well, flip over to the seller side, they might see that compelling offer and just be like, I mean, it has everything I want, it has everything I'm asking for. Let's just accept this. Here's what I like to do in these situations. I like to always counter an offer like that. Really, any offer. And there are some exceptions. There are times when you're desperate as a seller. Maybe your home has been on the market for a really long time, and that offer comes in, and you're just in a position of desperation. And you're just like, you know what? I can't handle any more back and forth. Just accept it. I get that. But generally speaking, it's good advice to always counter an offer that you're thinking about accepting, even if it's just a verbal counter. Why? Because you want to see how the buyer handles it. If the buyer can't handle a little back and forth before going under contract, how are they going to handle it when the inspection report comes in and the inspection report shows a bunch of stuff that needs to be done? How are they going to handle it when the appraisal comes in? The appraisal comes in low. How are they going to handle it when they hit some other kind of rough spot in the transaction? The only way to know, and there's not a way to know, but the best way to try to find out is by actually having a little bit of countering and a little bit of back and forth on the front end before you actually get under contract. You always get good intel, and it gives me intel from the standpoint of me communicating with the buyer's agent. What's this buyer's agent like? How do they handle it? Do they handle confrontation well? And in this market, this shifting market where buyers are really, really flaky, I feel like this is more important than ever. So use that ability to counter in your toolkit when you are trying to sell a property, right? Don't just accept the first offer without doing any sort of countering, even if it's just a really minor point. Again, all we want to do is to assess the buyer and the buyer's agent, how they handle these sorts of confrontational situations. Number 2 for sellers, do not overprice under any circumstances whatsoever. Do not do it. This market is brutal. If you are trying to overprice a property, don't do it. Stick to what the property is worth, even maybe a hair below what you think it's worth, just to be safe. You will get more money in the long run. I did the study several years ago. If you've been a listener for 4 years, you already heard this. I analyzed solds in Greenville and looked at homes that had to have big price reductions. And I defined big price reductions as $15,000 or more. And then I analyzed how did those homes that had the price reductions fare on a price per square foot versus the homes that did not have price reductions or didn't have as large price reductions. And the difference was $12 a square foot. The homes that had the big price reductions ended up selling for $12 a square foot less than homes that did not have to have that big of a price reduction. Now, $12 doesn't sound like much, but if it's a 3,000 square foot house, that's $36,000. Remember, it's $12 a square foot. Do you want to lose out on $36,000? I don't know very many people that just want to throw that away. Well, if you're overpricing your home, you are throwing away money because the listing will get stale, and then you'll have to reduce the price, and then you'll get these people that see blood in the water and that attack like sharks and make lowball offers, and it creates a death spiral for your listing that you don't want to happen. Got another example for you. I had someone reach out to me a few months ago. They wanted to sell a house. I'm not gonna give the real numbers here. They wanted to sell a house. We'll just say for $500,000. And actually, back up for a second. They didn't tell me that. They didn't tell me what they wanted to sell it for. They told me, hey, we've got this house. We're interested in listing it with you. You were referred to us by someone close to us. Can you go to the house and tell us what you think about it? Tell us what you think it's worth. So I went, I looked at the house, and I said, it's worth $450,000. Again, I'm just throwing out a number. This is a real scenario, but I'm making up specifics so as, to not leave anyone hanging out there. I never talk about my clients on the show in a way that you can identify them. So $450,000 is what I said it was worth, and I was very confident on that. And so they got back with me a little bit later, and they said, hey, we found another agent that was willing to list the house for $550,000, and that's who we're going to use. Well, I was like, that's fine. It's your house. Like, I never get upset when someone uses another agent. because it's a free market. They're allowed to do that. And so they listed it for that price. And eventually the price, I was watching it. I saw it go on the market. I thought the listing was pretty good outside of the price. There are some other things I would have tweaked, but whatever. So then the price came down. $525, $500, $475. And then finally I got a call from the sellers, and they were just like, we're firing our agent. We want to relist it with you. And I was like, well, quite frankly, your agent didn't do a terrible job marketing the property. There's definitely some room for improvement, but you just got to come down on the price. I told you what the home was worth, and you didn't listen to me. That is the number one thing that you need to fix in order for this home to be marketable. So they did relist it with me for the price, roughly speaking, that I recommended. Actually, they asked me to go a little bit above that, right? So we'll just call it $460 as opposed to $450. I was like, that's fine. I'm willing to do that. Well, guess what? We got under contract for $460. Great. But then the appraisal came in, and the appraisal came in slightly low. Very, very slightly low. Well, the buyer couldn't... The buyer would have had to back out on the basis of the low appraisal. So they had to come down to the price of the appraisal. Well, guess what? Had they simply listed it at $450, the way it all played out, they would have most likely, the appraisal was so close to that number because the appraiser agreed with me, right? I didn't communicate that to the appraiser. He basically appraised it for the price that I had told him to list it for, just slightly below that. I'm very, very confident because I know how appraisers tend to operate. The gap between what I proposed the list price and what the appraisal was so close. I bet the appraiser would have simply matched the contract price had we gone under contract for the amount that I had proposed for listing it. So if they had listed it for $450, they would have gotten it under contract for $450, and most likely it would have appraised for $450. Instead, it actually appraised a little bit lower than that. But because the contract price was even higher, the appraiser doubled down on his price that he had given his value for the property, and they had to go even lower than the price that I had proposed. I don't know if that was a good explanation. I apologize if that was confusing, but the long story short was multiple mistakes that were made in the process of trying to sell this house. And they could have gotten more money for it, in my opinion, but because they were just trying to trick the market, right? Try to make the market buy a house for more than it's worth. They ended up selling it for less than it was worth. And this happens over and over and over again. And unfortunately, sellers tend to get fixated on these numbers, and people that haven't sold a lot of homes don't understand the process, don't understand how these basic economics and basic math works. And this is what ends up happening in the long run. Number 3 for sellers, proactively address repairs by either fixing them or pricing them into your list price. Listen, if you know things that need to be fixed, you must fix them, okay? This market is brutal, again, to sellers that have homes that need even the most basic of repairs. Just get them fixed. Or if you're not going to fix them, like for instance, if you've got a fireplace that you've never used, you don't even know if it works, you don't need to go out and have a chimney sweep come in there and fix all that. Just put in the listing that it's selling as is and factor that into your price, right? But you can't just ignore the fact that there are things that need to be fixed. You have to fix them or price it into the list price, because buyers are already super wary of homes needing repairs. And guess what? They're going to see through it. If you just throw some lipstick on the pig, declutter and reorganize and whatnot, make it look good for the photos. But then when you walk through it, you see all these issues. Buyers are going to see it either during the walkthrough, either during the showing, or at inspections, and then they'll just back out at that point, or cause major issues for you at that point. You don't need that. Proactively, don't be reactive, be proactive. Back from 2020 to 2022, we could be very reactive, right? I had one listing that was a complete disaster, needed a ton of work, and I was like, I can sell it. Actually, I had a bunch of these, but I had one in my mind. that was like this. I was like, I think I can sell this. Well, I ended up needing $40,000 worth of repairs. We did it. The seller was willing to do it. He knew he wasn't going to sell it without doing that. I organized all those repairs. I handled the entire thing for him. My seller didn't do anything besides show up at closing and sign away to get his check. In this market, wouldn't work. That house that I sold however many years ago, I could not sell it in this market without those $40,000 of repairs being done in advance, or without reducing the price dramatically. And you're typically having to reduce it for more than what the repairs are worth. So you would have to reduce, if it's $40,000 of repairs, you'd probably have to reduce the price by $50,000 or $60,000 in order for people to be interested. Because people in their minds, they're going to always overinflate the cost of repairs. So just be proactive. Don't be reactive. Number 4, I've said this before, but do not try to cut out buyer agents, right? We're going to have a conversation soon. These commission changes are coming in a couple of weeks. And so I will be on the front lines with you talking about that in this podcast. But don't try to cut out buyer's agents. In doing that, right, in saying that you don't want to work with buyer agents, or you don't want to offer concessions for buyer agents or anything like that, you're just hurting yourself, right? Because you're cutting out the vast majority of buyers who want or need buyer's agents, and it's self-defeating to cut them out. And maybe you think, and fairly, that buyers should pay for their own agents. I completely get that. If you feel that way, very understandable. A lot of people feel that way right now. But remember, this is the most unaffordable market ever if you're a buyer. And if you're still cutting out, if you're cutting out buyers that can't afford their agents, you're cutting out a lot of buyers. A lot of buyers can't afford to pay for their agents. And you say, well, forget it. Who cares? I don't need to work with them. You're limiting your buyer pool, and you don't want to do that, right? This is a market where you need as many buyers as possible in order to get the best offers possible. So you need to do everything you can to make your listing attractive to as many buyers as possible. And one of those things is to be able to help them to afford having a buyer's agent, which almost every buyer wants right now. It's like 95% of buyers want to be represented by an agent, and they don't want to be completely on their own in a transaction while the seller has their own agent. And so cutting out buyer's agents, bad idea. I'm not going to tell you need to do this percent or that percent or anything like that. National Association of Realtors tells us those discussions are off limits nowadays, so we'll just move on from that. But you need to consider that a lot of buyers are going to need help with their buyer's agents, and you as a seller need to factor that in. All right, final point here, final strategy. Look at the houses you're competing against and be realistic. A lot of people get focused on a lot of other things when they are listing a home. Like I had someone recently tell me about construction costs. Okay, well, what it would cost to build this house now is far more than what I want to sell the house for. That doesn't matter. Buyers aren't looking at that unless the buyer is comparing your house to new construction, which very few buyers are doing. All right, most buyers that are looking at resale homes are comparing that to other resale homes in that area. They're not comparing it to new construction. I'll hear people talk about other things, talk about this price per square foot and this, and all these different things. Looking at homes that sold a year ago. Well, the market's appreciated by 5% since then. So listen, what buyers are doing right now when they are looking at homes, and this is what they're always doing. Yes, they factor in comps and things in the past, and they might loosely factor in construction costs and things like that. But the primary thing, you can't just focus on all of those periphery things without focusing on the primary thing. The primary thing that buyers are looking at when they're looking at your home is they are comparing it to all the other homes that are for sale on the market. That is your competition. Your competition is not the home in your neighborhood that sold a year ago. Your competition is the home that's for sale in your neighborhood right now. And unfortunately, most people, when they do that, I have some clients every now and then that will actually do that, but oftentimes they struggle with being realistic in terms of comparing their home to other homes. And you need to remember that right now, okay, inventory is higher than it's been in a very long time. We've talked about this. So if you have competition, if you had competition 2 years ago, you've got way more competition now. Tons of competition. So again, this is another thing I hear people say, well, my neighbor sold for blah, 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 blah. Your neighbors didn't have this much competition. Okay, you've got to adjust your strategy based on competition. So when you're looking at, okay, here are the homes for sale in this area, or here are the homes for sale that have these features or whatever, these are going to be the homes that I compete against. You cannot nitpick the other houses on the market in a way you aren't willing to nitpick your own. This is what I'm talking about with being realistic. I hear this. You guys have no idea how often I hear this. People will come to me and they'll try to sell me on why their home is nicer than all these other homes that are for sale. That just doesn't work, right? First off, I'm a real estate professional. You don't need to sell me on anything. I do this for a living. But guess what? Buyers that are looking at homes, we don't have the opportunity to make a presentation comparing this home to all the other ones that are on the market. So the home needs to stand up on its own. It needs to stand out from the competition, and it needs to compare favorably to the competition. And so if you're just nitpicking all the competition, you're just saying, oh, that house isn't like mine. That house is way worse. It's not in as good a shape. Lousy floor plan. I don't like that neighborhood as much. Some of those things might very well be true, but you're just trying to make yourself feel better about your own home. You're trying to make your agent feel better about your own home, and it doesn't work. You cannot fool the market by fooling yourself or by fooling your agent. Again, go back to the story I just told before about this listing where they wanted to list it for a lot more. They did the same thing. They were comparing to other homes and just saying, well, you can't buy anything like this at this price. But that is not the way the market works. They were nitpicking all the other homes and making their own home seem like, oh, this is perfect. You've got to be realistic. Most people overvalue their home and undervalue all the homes competing with theirs. And when you do that, you're just lying to yourself. As I've already said, you can't fool the market by fooling yourself. You can't lie to the market by lying to yourself. So just be honest from the get-go. Because guess what? The market will keep you honest. People, the real estate market, it's capitalism. It is sheer capitalism. It's supply and demand. And guess what? The demand for houses like yours butts up against the supply. And if you're just unrealistic about the demand or the supply, what are you doing? Listen to the experts, listen to people that actually are in this marketplace and know what's happening and know what they're doing, and don't take it personally. There's no reason to take it personally. Me as an agent, I get paid, generally speaking, on a commission basis when I help a client buy or sell a house. Okay? That means I want the house to sell for a lot of money. If my strategy in marketing a house seems like I am trying to get you less money, you are misunderstanding my strategy. Because as I've already said, sometimes less is more. Because if you overprice a home when you list it, you're going to get less money, and you have to factor all of that in. So keep all of these things in mind. Don't try to create a strategy that doesn't work. Don't try to compare your home to homes that are not comparable. That's another thing that I see people do all the time. They will overvalue their home, and then they'll start comparing a home that's in a production built neighborhood to and is a cookie cutter with the other homes around it. They'll compare it to another neighborhood that sells for $200,000 more because those homes are custom. You can't compare a custom home to a production built home. That's just not how this works. I'm sorry. I wish that's how it worked. It would simplify things. And so you need to be realistic. You need to be honest with yourself first and foremost. If you're not honest with yourself, you are only going to hurt yourself. So that's it. Strategies for the shifting market for buyers and sellers. I hope that was helpful for you guys that are in this market. Please, if you enjoyed this content, please subscribe so you don't miss future episodes. Like, rate, review as well to get this out to as many people as possible. And if you need a realtor, I'm your guy. My contact information is in the show notes. If you need an insurance company, Piper Insurance Group, they are also the company that you need to contact. Their information is also in the show notes. I appreciate you guys, and we will talk again next time.